Good evening. It is time for today's tax talk. I'm your host. I'm attorney Stephen Leahy. It is Tuesday, August 2nd, the year of our Lord 2022. The IRS it is Crypto Tuesday, so we're going to talk about cryptocurrency, and the new 1099 form that the IRS is coming out for the exchanges to report losses and gains and losses. I think it's important, and we'll talk about that. Won't you join us? So here we are. Again, I was talking about the 1099. It's called a 1099 DA, digital asset. We've talked a lot about 1099s on this show. 1099 NEC, the new NEC, replaced the miscellaneous non-employee compensation NEC. The 1099K, which a lot of people are going to start getting from the cash apps next year. Those are the new rules that they have to have the 1099K. The 1099B for brokers, one of the things that was going on in 2018, 2019, I have some clients, let's put it that way. I have some clients who have had this problem with the reporting where they got a 1099K from, for instance, let's say Coinbase, and that reported their trades. But the trades did not report accurately there was no basis in the trades. And so some people look like they traded $400,000, $800,000, and they only had really $20,000 in the account. And they did trade that much, but many trades, many failed, many did not. And I think in one case that I have, where the IRS said they had made $200,000 or they owed $200,000 in taxes because they profited $400,000. When you do the math right with the trades, they actually lost a short-term capital gain loss of $5,500 or something like that. So, but the IRS said that they owed a bunch of money and they assessed us tax against them, and we fought that, and we're still fighting that, but we're going to win that one. That's easy. Well, one reason why we're going to win it is we're going to talk about that in just a minute. But let's start, like we always do here at on Crypto Tuesday, with the markets. We always start with the markets. Here we are at our favorite site, coinflip.tech, and you see the markets kind of steady over the last 24 hours. Here's Bitcoin over the last week. Kind of had a kind of good day, but kind of flat over the last couple days. I'm going to look over the last 30 days. I think that the last 30 days are interesting. Why is it that it works when I do that? So, during rehearsal, it worked. Let's see if I can get it to work. Oh well. You can't get it to work. Okay, so then let's look at the Ethereum over the last week. That's Ethereum. Very similar, as we see often on this, that Ethereum and Bitcoin kind of track each other. And that's kind of what's happening here, isn't it? Let's go back up to Bitcoin, and you'll see very similar. That's the last 24 hours. Last 7 days. That's the last 7 days. Okay. So let's go to the story today. First story is in Forbes. And the IRS is working on a new tax form to capture your crypto activity. As I mentioned, the IRS was behind the curve when in before 2020, actually 2021, the IRS didn't have any rules on how they had to be reported, and some exchanges would use the 1099K, which is not actually It's not like a brokerage where it shows you what you bought, what you and the basis and all of that. It just said how many trades you had. So if I traded today, I bought $1,000 worth of something today. I sold it and I bought another $1,000. Now it looks like I bought $2,000 worth of assets, but I have the same $1,000. So I'm grateful to be involved in two things that are never going out of business: Bitcoin and taxes. Well, for taxes for sure. I think Bitcoin too. I think it's a bunch of hype. But let's see what happened. The IRS is looking to get more efficient in collecting taxes from crypto trading. What happened? The Infrastructure Act passed by the U.S. Congress in 2021 brought cryptocurrency exchanges under controversial broker definition and subjected them to the IRS information reporting regime. We talk about information reports a lot on this show. Again, we mentioned all the 1099s, the 1098, the W-2s, all of these information returns. As a result, starting January 1st, cryptocurrency exchanges will be required to report their customers' annual cryptocurrency gains and losses to the Internal Revenue Service, similar to stockbrokers. The Treasury is crafting regulations related to the Infrastructure Act. Regulations, commonly referred to as regs, interpret legislation and give specific direction on how to comply with the law. As part of the regs, the IRS is reportedly working in introducing a brand new tax form called Form 1099-DA, DA, digital asset, for exchanges to capture individual annual cryptocurrency activity subject to taxation. The draft regs are expected to come out in the next coming months, and for now, the specifics of the form and information it will capture are unknown. If adopted, exchanges will use the new form to report your cryptocurrency gains and losses to the IRS. What are 1099s? A 1099 is a form filled out by financial institutions summarizing a client's annual activity subject to taxes. There are a few different types, including 1099-Bs, proceeds from broker and barter exchange transactions, issued by stockbrokers to report annual gains and losses arising from stock transactions, 1099-INT, interest income forms, which are used by financial institutions to report annual interest income, 1099 miscellaneous information, forms that some cryptocurrency exchanges use to report staking and similar types of income. There are three copies to each 1099 form: copy A, copy 1, and copy B. The first two are filed with the IRS, and the taxpayer state, respectively. But by the financial institution, copy B is sent out to the customers to be filed with their taxes. For example, say you purchased 1 unit of TSLA for $500 and sold it for $1,200 on the Robinhood during 2021. By January of this year, Robinhood was required to fill out a Form 1099-B showing $700 of capital gains subject to taxes. Copy A and copy 1 report this amount to the IRS and to your state, respectively. You receive copy B to help you file your taxes. The purpose of 1099s. Thanks to information reported to the IRS by financial institutions through 1099s, the agency allows your annual gains and losses before you file your taxes. If you file a return without including that activity, the IRS can automatically detect the discrepancy and send you a tax notice to correct the error. Thus, 1099s help ensure that taxpayers engaging in income-generating activities with financial institutions are tax compliant. It's really the IRS keeping an eye on you, making sure that you report everything and getting their fair share, according to them. Form 1099-DA. Currently, there's no dedicated 1099 form to capture one's annual cryptocurrency gains and losses. In the absence of a cryptocurrency-specific form, certain exchanges have used 1099-Ks. I talked about 1099-Ks, and they're wholly inadequate to report cryptocurrency activity in the past. Some have decided not to issue any forms for gains and losses. As a result, the information reported to the IRS by exchanges has been poor to non-existent for a long time. This has led to lower tax compliance rates among crypto users. Because customers don't receive a form at the end of the year, they falsely believe that there's no activity to report and no taxes to pay. For example, 99% of taxpayers report wage income when they receive a W-2. From employers, over 80% of stock account holders report capital gains and pay taxes when they receive a Form 1099-B from brokers, summarizing the annual capital gain loss activity. On the other hand, if a third party doesn't generate a tax form, more than 50% of taxpayers do not comply with the taxes, which is why the IRS wants to make sure everybody has an information return for everything that you do. And again, that's why they want to go after your bank account. Form 1099-DA aims to change this by capturing cryptocurrency activity and mandating exchanges to report it to the IRS on an annual basis. It is reasonable to expect that a new form will report the information needed to calculate gains or losses, such as the asset type, date purchased, date sold, gross proceeds, and cost basis. 1099-DA potential pitfalls for multi-exchange users. Although information reporting has clearly increased tax compliance in many non-crypto related areas, following the same traditional system in crypto can easily create more gaps or even completely fail due to decentralized finance, transfers, and self-custody. Rapidly growing DeFi exchanges such as Uniswap and DYDX will be unable to issue any form of 1099s because they are not collecting so-called know your customer information for users. This information is generally required to file any Form 1099 with the IRS in the states. If you don't know who they are, how can you send them a 1099? Additionally, asset transfers between crypto wallets and exchanges are extremely common compared to the traditional securities world. These transfers between centralized exchanges to from DeFi and non-complying overseas exchanges will also lead to incomplete and inaccurate 1099s due to cost basis gaps. Moreover, self-custody is common in the crypto world to ensure the privacy and security of the assets. Self-custodied assets will also make it harder for exchanges to issue complete 1099s because the cost basis information is not usually available. Finally, multi-exchange users will likely get multiple 1099-DAs from various platforms. This can lead to confusion and will require taxpayers to use crypto tax software to reconcile activity across multiple wallets and exchanges. If you are a single user exchange user, a shrinking segment of crypto investors, 1099-DAs will likely show all the information necessary for you to file your taxes accurately. This will make your tax filings faster, easier, and cheaper than they are today. According to the Infrastructure Act, exchanges are required to follow information reporting rules starting January 1st, 2023, and issue 1099-DAs to customers in the first quarter of 2024 for the previous tax year. But because the rules have not yet been publicized and made available for public comment, the timetable may be extended by a year. The next step, expect to see a draft Form 1099-DA form along with proposed regs in the coming months. And then there's some further reading. Okay, so here's another story. This is a short story here. Let's blow it up a little bit so we can read it. In November 2021, Congress passed the infrastructure bill containing the so-called broker rules. The broker rules require that crypto firms collect customer transaction data and was set to commence in 2023 with full reporting to occur in 2024 for calendar year 2023. Recently, it has been reported that the IRS is considering a delay in implementing the reporting, although no official statement has been made or confirmed. Since the passing of the law, industry stakeholders have been critical of the proposed reporting, stating that the change will require significant internal software and reporting systems upgrades and associated updates to relevant customer agreements, given the invasive disclosure requirements. Treasury and the IRS have not offered a reason for the delay, but it could potentially relate to the IRS's efforts to develop a new information reporting form, Form 1099-DA, digital asset, which would be used for this reporting. A draft of the form is set to be released within this year. Alternatively, the government has indicated that in the 2022 reporting Green Book that the further crypto guidance is forthcoming, including a revision to the broker rules to make the reporting less onerous for non-institutional taxpayers. While the cause or duration of the potential delay is unknown, it is a welcome relief for taxpayers who have been preparing for the new reporting standards in 2023. And then one more. Okay, one more. Okay. Let's see what happened. Call my cookie policy. Here's one more story I wanted to talk about. And this is because it's come from CoinLedger. Now, I have used CoinLedger. They don't sponsor me. They haven't given me any money. They haven't asked me to plug them. And I'm not really plugging them. But I wanted to mention that I have used this service. And it did save us a ton of time and effort. And it was for the 2018 where we got a 1099K. And this service did work. Okay, so, and it saved us a ton of time. So if you're buying and selling cryptocurrency, you might receive a Form 1099-DA in the future, in the near future. Recent reports suggest that cryptocurrency exchanges may soon be required to send this form to customers. In this blog, we'll break down everything we know so far about 1099-DA and explain how it can help you file your crypto taxes. They don't know much, so. Form 1099 is used to report non-employment income you receive outside of your job. Currently, there are more than 20 different variations of Form 1099. The versions most commonly used in cryptocurrency exchanges are Form 1099-B, Form 1099 Miscellaneous, and Form 1099-K. For more information, check the guide. What is a Form 1099-DA? An article in Bloomberg stated that the IRS will be unveiling a new version of Form 1099 in the near future, Form 1099-DA. This form is specifically designed to handle the reporting for cryptocurrency and digital assets. Why is the IRS creating Form 1099? In November 2021, the American Infrastructure Bill was signed into law by President Biden. The bill stated that the cryptocurrency exchanges would be required to report their customers' capital gains and losses to the IRS through 1099 forms starting in 2023 tax year. The law drew criticism from prominent voices of the cryptocurrency ecosystem. Cryptocurrency's unique properties make it difficult for exchanges to accurately report their customers' gains and losses. It's likely that the IRS is creating Form 1099-DA to tackle this issue and make it easier for cryptocurrency exchanges to report their customers' activities. So then there's some info graphics. I'm not going to go through that. If David decides to sell his Bitcoin for $20,000, BlockFi won't know his original cost basis. His cost basis has been reported on his tax form as missing or unknown on his 1099 form. Unless David can prove that he originally bought his Bitcoin for $10,000, he must be responsible for the full $20,000 in capital gains. As you can imagine, the missing information can create stress and confusion for taxpayers. So since no official information has been provided on Form 1099-DA, we don't currently know how Form 1099 will be different from the other 1099 forms. Some tax experts speculate that the Form 1099-DA exchanges will no longer be required to report cost basis. The form may solely require exchanges to report gross proceeds from crypto disposals that happened within their platforms. If this is the case, the burden will be on the taxpayer to track the cost basis for all of their crypto assets and accurately report their capital gains. I don't believe that's what this is going to be, because that was the 1099-K, and that caused nothing but trouble. You really need to know your cost basis, and it needs to be reported in the 1099 if they know it. To accurately report your crypto taxes, you'll need to keep a comprehensive record of your cryptocurrency transactions across all your wallets for information. So again, I think, well, I've got one more paragraph. Let's read it. Looking for an easy, then now it becomes a commercial. So this is a good way. Of course, I think that this operation, this outfit is looking for that, because that would help them, right? Because you need that service in order to convert all of those transaction reports into some readable form to report to the IRS. Because if you've seen the transaction reports, they're not easy to decipher. And if you have thousands of transactions, it's nearly impossible to do it by yourself. And so I don't believe the IRS will do that, because if they leave it to the individual, it won't get done. And then it's not really an information return. They're not really gathering that information from anybody. And that will defeat the purpose of having an information return. Again, if they leave it to the taxpayer is going to get in trouble, and it will causes nothing but errors and problems and concerns for the IRS. So they would like to put that burden on the exchanges, make them tell us and do the math and set up systems, no matter what it costs them, because it would make it easier for the IRS and easier for the taxpayer. So that's what I predict is going to happen. It's going to have to report. Now, again, you're still going to have to reconcile if you're using more than one wallet. If you're using a lot of different exchanges, the onus is going to be on you to reconcile those numbers. But I think the exchanges are going to have to report that income. Again, the transaction reports are new. I've used this Coin Ledger. With the right software, it's done in a matter of minutes, or less, where it would take you days to track this yourself. And so to require some exchange to have this type of software, while it might be expensive to implement, would save tremendous amount of time and energy to taxpayers and to the IRS. Okay, so that's where we are. Thanks so much for being with us today. I love talking about this stuff, right? The information returns, 1099s. This is all IRS stuff that I really like. And remember, I'm going to ask you to like and subscribe to our content. We need your help to get this content out. And so we ask you to help us by liking and subscribing. And remember, if you are fighting the IRS, if you have unfiled tax returns and you don't know what to do, first thing you should do, get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com, freeirsbook.com. Get your free copy of Deal with Your IRS Problem Today. Again, thanks so much for joining us, and we'll see you again tomorrow. Tomorrow is another day, and we look forward to seeing you here with us. Out.